Good morning, good afternoon, and good evening, everybody. Hey, welcome to this episode of the Note Closure Show. As always, Scott Carson, excited to be with you here today. And today's episode, as you probably read, is all about kind of the loan servicing, how to pick a good loan servicing company to manage your note portfolio. And this is a very frequent question we get. Do I need to go get hire a servicing company now? Like one of our newer students who went through one of our workshops, Judy, just asked this question. Hey, I'm looking to do this. Do I need to go hire a servicing company before I even get around to buying my first note? And the overwhelming answer is no, you don't need to go hire a servicing company now until you've owned something. And let's walk through this a little bit here first and foremost. Okay. Now, I've come up with a list of 5 big keys that you need to consider when buying notes and hiring a servicing company. But before we get to those 5 keys, I want to walk you through this process, some things to keep in mind. Okay. A lot of the times when you're buying either a performing note or a non-performing note, you're going to ask for a full payoff statement, right? Making sure that the unpaid balance and legal balance that you're bidding off of matches up. Okay. And that will tell you who the servicing company is of that payoff. Now, if it is being self-serviced, where the investor, whoever holds the note, is servicing it themselves, that means they're collecting payments. That's a red flag for me. I don't like to deal with self-servicing. They need, especially with owner finance notes, if you're got an owner finance notes, put it with a third-party servicing company. Put it with somebody to collect the payments, to keep track of this stuff that you don't have to. You don't have to mail statements out, that kind of stuff. If you're doing that to save on 25 or 35 bucks a month, it's going to cost you more in the long run when you get a lower bid. Okay. But when you're buying, I'll give you an example. People are either buying performing or non-performing notes. Okay. So if you're buying performing notes and the servicer will allow you to retain servicing with them, where you keep the existing servicer. And I would, if there's as long as there's not some minimum or huge amount that the servicing company requires. There are some servicing companies out there that require you to have a minimum number of notes with them or a minimum monthly bill. Okay, we'll talk a little bit more later on. But if you can take over service, or not take over service, but you can buy those notes and keep the existing servicer, and it's a performing portfolio, do that. As long as it's not ridiculously stupid expensive to do it. That allows for that borrower to keep making the same payment to the same company without any hiccup, without having to try to find who they need to mail it to, how they need to set up ACH or automatic payments. Try to keep the existing servicing coming. Okay. Performing notes, pretty easy to do. Okay. Non-performing notes, you may be able to keep an existing servicing company, or some servicing companies don't want to deal with non-performing, so you may need to find a different servicing company. Okay. Or if you're buying like reverse mortgages, you may need to either A, have to keep it with the existing company, or B, move it to somebody who's licensed for Fannie Mae, HUD, those type of loans. And there's a few out there that are licensed to hold those. Not every servicing company is going to be licensed in that area. And also, depending on where they're licensed or what states are licensed, that's one of the big things as well. So keep that in mind. Servicing, it's not something to be scared of. Servicing companies are going to send you 3-4 page information about your entity, your LLC, what you're buying, that kind of stuff. All your LLC information or whatever entity you're using, they're going to ask you for that. And that servicing transfer is going to take place between the existing servicer, whoever the existing servicer is, from your seller, reaching out to your company, keeping it with the existing company, so they'll just need your information to set up a new account. Okay. Or B, setting it up and transferring that information to your company, whoever you're hiring, if it's a new servicing company. And that can take 30 to 45 days for that to happen. So one of the things to do is right before the day you're supposed to fund. Yes, if you're going to have to get a new servicing company, you're probably going to have to do that a week out, okay, from funding, just to let them know who you're going to go with. That's fine. If you're going to keep the existing servicing company, you just need to set up a new account, pick up the phone, fill out some information, and pick the different type of servicing. We'll get to that in a second. But it's not meant to be complicated. I'm going to tell you right now, all servicing companies suck in some sort of fashion. All right. Not all are created equal. There was a servicing company out there when we were buying a lot of contract for deeds, was servicing this stuff on behalf of Harbor, and they were just horrible. The servicing company sucked. I couldn't get a hold of somebody there half the time. The borrowers couldn't get a hold of anybody there at the time. And I knew that if we bought these notes from Harper, these contract for deeds, and moved them to a servicing company who was even would answer the phone, we would have like a 50% reinstatement rate. And that's exactly what we did. So we knew that, hey, part of the issue with this portfolio being non-performing is that the servicer was just horrible, because a good servicer can make or break your portfolio. And we've had both. We've had good ones and we've had bad ones. Okay. So let's go through these 5 points, and I'll probably cover crossover and cover these other things. But these are some things to keep in mind when looking at servicing, buying, hiring service. So these are our 5 keys to servicing success for you guys to keep in mind. Okay, come on. Oops, that's not what I want. All right. I don't know what's doing. Okay, let's try this again. All right. There we go. Okay, now I've got my slides up here. All right, so like I said, servicing companies struggle. Some are better than others. Now, if you're like trying just to use a company, it's like a local guy, especially the owner finance notes. If it's just in a local state, like you're just in Texas, it all depends on the asset class and how difficult that asset is. If it's performing, pretty easy. But if it's non-performing stuff, that takes a little more outreach. Okay. Part of what I like buying institutional debt is it's pretty clean paper, and usually with a very professional servicing company that's got licensed people who've gone through fair debt collection practices. It's not the originator of the note trying to service itself there locally, or a mom and pop shop that might have 1 or 2 people. You don't want to be in a mom and pop shop. Trust me on that. It's difficult. If you find out that you're with a servicing company that's experiencing difficulties of keeping staff, or you're constantly getting somebody else on the phone, or it's hard to get somebody on the phone to set up an account, it's probably going to be hard for you to get a hold of somebody when you need to talk to them about your portfolio or about your non-performing stuff. So let's first talk. The number 1 key is licensing. All right, making sure that your servicing company is licensed in the states that you're buying. Okay, if you're not buying in all 50 states, you don't need a servicer that's licensed in all 50 states. Okay, there are several servicers that we use that aren't licensed in all 50 states, because I'm not buying in New York where it's difficult to get licensed. I'm not buying in New Jersey. I'm not buying in Alaska or Hawaii or Puerto Rico. Okay, so keep that in mind. Now, you're probably going to have 2 or 3 servicing companies. You're probably going to have one for stuff that you buy that's about to go to foreclosure. And if it's within 90 days of foreclosing, if you can keep it with that servicer and they finish up the foreclosure process, that's great. Keep it with them. There's no additional cost, stuff like that. Okay. And if they're licensed in that state, just keep it with her, finish the foreclosure out, and move on to something else. Okay. The licensing key, and making sure that they're licensed not as but as a debt collector in that state. There are some servicing companies that try to get around by collecting in other states that they're not licensed in. So keep that in mind. All right. And some won't get licensed until they've got a specific minimum amount. Like we were used to deal with Covey Financial, and they weren't licensed in Arkansas. They were willing to get licensed in Arkansas if they got more than 1 note. And we had one investor that was buying a note in Arkansas, but they ended up, oh no, we're not going to have more than 1 note in there. Well, then Covey was like, well, we're not the right fit for you. Okay. And that's okay. Covey Financial is a great servicing company if you just have performing stuff now and you've got some minimums. We'll talk about it later on. Okay. But licensing, it's very easy. Go to the MLS, National Mortgage Loan Servicing Registration thing, or whatever it's called out there. Type in the servicing company. It should pop up exactly what states and what type of licenses the servicing company has that you're making. So whether you're dealing with Allied or Select Portfolio Services or Texas Servicing or whoever it might be, you can check it out by seeing it. And like I said, making sure that they're licensed in the states that you're buying notes in. Okay. Or they're registered as an entity in that state is an important thing. Now, servicing options. By options, most servicing companies will have usually 1, 2, or 3 different forms of servicing. Like some, Loan Servicing Center only wants to deal with performing notes. They don't want to deal with any non-performing, and they only want non-performing in non-judicial states where it's easy to foreclose and got to jump through the hoops and stuff like that. So understand what their options are. You usually have full collection services where the servicing company is doing everything. They're doing the borrower outreach. They're not only collecting and sending out statements, but they're picking the phone and calling 4 or 5 times, okay, a month to your non-performing side. And that's okay. A performing note usually is going to cost you about 35 bucks a month, 25 to 35, depending on the servicing. Non-performing can run you as high as like $95 a month for non-performing, plus any a la carte fees added on. By a la carte fees, I mean if they send out a door knocker, that's going to cost like 45 to 85 bucks. If they're going to do double check your taxes and pay the taxes, that may cost for tax, monitoring. They also, in non-performing, may also get a fee for every type of workout they get. There may be a fee for them to get that borrower back on track. They may get a flat rate if it's going to be a deed and loan. If it's going to be like a foreclosure, they will probably get a fee. You also have to make sure and double check your servicing agreements with these that they don't charge you a fee or a huge fee to move the assets off to somebody else. All right. A few years ago, Madison Management changed up their servicing, and now we're charging an exit fee for you to transfer notes off to somebody else. Okay. You also will want to adjust how you're making payments on the servicing company. If you're buying performing and non-performing, it probably makes sense for you to have the servicing fees deducted from the money collected. All right. You don't want money to come into your account and then go back out. Just have them go ahead and withdraw it from what's being paid, and then you're just getting one wire transfer of what's left over, or they'll notify you when there's a shortfall of something. Okay. But like I said, usually performing, non-performing, and then self-managed is another form that some servicing companies. This is where the loan is boarded with the servicing company, and their licensing is okay, covers that, but they're not doing any borrower outreach. For those of you that start getting above 20, 30 non-performing notes, at some point it's going to become more beneficial for you to hire a servicing professional or a VA or somebody else who gets licensed in debt collection or takes the fair debt collection practices class and starts reaching out. That's what we did. It made more sense for us to just pay $20 flat rate a month or $40 flat rate a month to a servicing company. And we had a third party who worked for us independently because she was much more aggressive in borrower outreach. She was able to get a lot more people back on track faster, often in 7 to 14 days versus 30 to 60 days, which is what it would take this other servicing company to get rock and roll. Okay. So see if they have self-managed, or not self-service, but self-managed when it comes to non-performing stuff. That will save you a bunch of money. Now, if you're a one-man band trying to do it yourself, trust me, don't try to do that. Just put it in the non-performing and give it to the servicing company to do. All right. It may cost you a few more bucks a month, but at least you'll have somebody to reach out to. Okay. And that goes into further on with point number 4 being service and support. We'll talk about that in a second. But so we talked about licensed estates, the different options that they have available, full client, full managed, client managed, performing, non-performing. Ask out what they have the special. Now, minimums. This is a big thing. Okay. We've run into it where a servicing company had specific minimum notes required for us to have them for business. Like I'll give you an example. We were getting ready to buy some notes, and Halo was a servicing company in Dallas, and Halo required 100 notes minimum. If you had less than 100 notes, they didn't want to deal with you, or they would penalize you monthly to have them as your servicing company. Because it comes to, charging $25, $35, $45, $95 a month isn't making a lot of money. And sometimes these smaller accounts, when you've got somebody who's on the phone talking to them about your account, it just doesn't become profitable. You get what I'm talking about, right? So look and see if they have any minimums. Now, when you're a brand new investor, I'm not going to lie, it's going to be hard for you to find good servicing companies that will allow you to have one or a small portfolio of notes, but there's a few out there that will allow you to do that to get the ball rolling. And the idea is to go not just to hold 1, 2, or 3 notes, but to buy more notes. And what we see, especially with our coaching students, they're going from 1 to note to 3 to notes to 5 to notes to 20 notes pretty rapidly and growing their portfolio. Some people have closed on hundreds of notes and gone that route and self-manage them or brought somebody on board to help them manage the portfolio. We have even one person who started a servicing company. He's not doing a very good job because he's micromanaging. And I wouldn't use a servicing company just because it's hard to get anybody on the phone there, but he decided to do that. Totally dead set against it. I would not want to own a servicing company at all. All right. It's hard to make a lot of money, like I said, when you're making $35 to $40 a month, and that's it per month per loan. Okay. But the minimum side, we also ran into this with a company called BSI. They wanted a minimum bill of $5,000 per month. But when you're buying 2 notes from them, it doesn't make sense to keep that with them to get charged $5,000 when we would get paid, charged $180 for 2 non-performing notes somewhere else. Let's keep in mind. And that's important thing to know. Minimum up, you're about 90 days from foreclosure. No, it does make more sense for us to transfer that and get them somewhere cheaper for that. So just keep that in mind. So that's what I mean by minimums. Minimum number of loans, minimum bill monthly. Okay. So ask those questions. What do you charge monthly? What do you charge for your a la carte fees, your minimum stuff? All right. Service and support. Okay. I can't tell you how many times I've wanted to cuss out somebody on the phone from the servicing company. And here's one thing: pick up the phone and call the servicing company before you hire them. If it's easy to get a hold of somebody, it's going to be easy for your borrowers to get a hold of somebody to make a payment. That's the first thing, making sure they can get a hold of somebody in a timely fashion. Okay. I'm not a fan of FCI because they take forever to get a response back. And it's always, you got to fill out more forms, more paperwork when I've already filled out forms. There should be a way to automate a lot of that stuff. Okay. But they're one of the few companies out there that will work with one-off investors. Doesn't mean you're going to get a lot of service. Okay. And that's the thing, is finding out when you board your loan with a servicing company, who is going to be your asset manager and how often can I reach out to them? Not daily. And that's another thing too. Do not bother the servicing companies on a day in, day out basis. Yes, you are entitled to get an answer back to your questions, but don't try scheduling a phone call every day with the asset manager. He or she is not only dealing with your notes, they're dealing with other people's notes. Okay. So keep it in mind. If it's a non-performing note, a lot of times in the note investing space, it's a hurry up and wait. Of course, if you don't get an answer in a week or don't get something done, like you're trying to get a payoff or bidding instructions on to the attorney, that's important. You got to expedite that. And some servicing companies are glad to allow you to communicate directly with the attorneys or the legal side of it. Others want you to go through them directly. This is why I don't usually like to hire the attorneys from the servicing companies. I want to hire mine individually or have them, board to work with the servicing company, but I'm still going to communicate directly, especially when it comes to attorneys. I've had several times where I get an email and it's 2 days after the email was sent in for requiring bidding instructions and the foreclosure auction's gone through and I wasn't able to give my bids in directly. Okay. Or my bid instructions attorney to bid it up to that. Okay. Same thing with support. When you talk with servicing companies, talk to the asset managers. They should give you some options. I know as a brand new investor, unless you've gone through our coaching or classes, you may not know which way the wind's going to blow on a non-performing or the options that are available. I'll give you an example. I had a phone call on Thursday with one of my coaching students, Cal Ewan. He's buying a note in Pennsylvania. The borrower filed the plaintiff, who he's foreclosing on, filed something with the courts to try to delay the foreclosure. And his attorney asked him, well, what do you want to do? Well, Cal's like, what can I do? And the attorney's like, well, $500, we can defend this. You'll need to send us all the documents. And he's like, haven't you already gotten all the documents since it's a judicial foreclosure that to be able to enable it? And so he's not getting a lot of service from the attorney and the servicing company on that. He feels kind of hung out when they should have picked up the phone and talked with him about it. Here's here's what your options A, B, and C are. Here's what we need. We already have these things. That's not a lot of service when he's calling me. And so I was like, you need to call them back, have them walk you through exactly what you need. If it's a payoff, this huge payoff, you need to be able to give an example of what the payoff needs and be able to justify those with receipts or other statements and things like that. Okay. So by support, you got to have an asset manager that you can reach out to who's going to communicate with you. Now, of course, most servicing companies are going to look at you by a number of loans. The guy with 100 loans is going to get more service and support than the person with one note. Okay. If you've got a bunch of non-performing notes, that's going to be more service. You need more updates. I would highly recommend, especially with non-performing notes, that you have a conversation with your asset manager at least once a month. All right. And then find out what's going on with each note and expect updates on it and follow up with your asset manager. Hey, we talked 2 weeks ago. Where are we on this one? I mean, most of these servicing companies should have some sort of portal for you to log into and be able to see the notes back and forth from that. That's key. That's part of having good service, having a good portal that's easy to get in and understand what's going on with the asset. Of course, as also with the portal, it's key looking at what you're getting charged. I've never found a servicing company that was 100% accurate on their billing, and that goes to costs. We talked previously how a non-performing note may run you $95 a month, performing note maybe $25, $35, self-managed maybe $40 a month. Take a look at what they're charging you. Many times they're overcharging, or they're not accurate, or they're giving you costs on things that may not be associated with it. And they do not make it easy to understand what's going through as far as cost a lot of times when you look at the statement of what's being paid, what's being credited to what, sometimes it's like reading Latin. So don't be afraid to pick up the phone and ask to talk to the servicing company to go through the bills. What's correct, what's not correct, what's outstanding, what needs to get paid, and going from there, making sure their costs match up with what you're being provided with as far as service and support. Okay. The most important thing I can ask you is ask questions. Reach out, talk to somebody there, somebody who will get on the phone with you. That's one of the most important things out there. And if you're not getting the answers you expect or not getting a timely phone call, don't be afraid to be a pain in the ass. But give people time. If you send an email to them on Friday night or the weekend, they're probably not going to get back to you until late Monday or Tuesday. It's just what happens. All right. If you've got something you're foreclosing on, get a hold of the attorney and speak to the attorney's office directly. Because if you got to go through the servicing company and then they got to go through the attorney's office, it's going to delay things. So always try to hire outside counsel and have them sign up, but that way you've got a direct line of support. Look, if you're buying performing notes, a monkey can collect on performing notes. Every servicing company out there wants performing notes because they're getting paid for doing the least amount of work. If you're buying non-performing notes, that's where the more costs are going to come in. That's where more of the fees, workouts and strategy and structure and things like that come in mind. So just be prepared to have to follow up with these people. Double check what's going on and make sure you are not an absent party when it comes to your portfolio. All right. So the 5 keys to loan servicing, successful loan servicing, is making sure they're licensed. You don't want to get in trouble for having them service a loan they're not licensed state. They can't support you that way. Look at the different servicing options, different product options they have available for performing or non-performing or self-managed. 3, make sure you're not screwing up anything when it comes minimum wise, minimum bill, minimum numbers, things like that. Make sure you can get a hold of somebody in service and support to help answer your questions, to help guide you in the process. Some servicing companies will want to modify immediately. Well, modifying immediately triggers a taxable event you may not want to have. So don't be afraid to push back if your servicing company is offering one thing. It's important to let them know, like, hey, I'm buying these non-performing notes. I'm willing to do A, B, or C for these, or D, E, F for these. Your servicing company, your attorneys work for you. You don't work for them. And that's why I make sure that your costs are up to date and accurate with the bills and making sure things are getting credited properly, making sure that if you do have to advance something on behalf of the borrower, whether it's taxes or insurance or some sort of city fee, making sure that that is getting paid and getting credited in either to the lender, the lender advanced or escrow accounts to make sure that you're getting paid back and the full payoff is taken care of when either it's sold or sold off. That's another thing to keep in mind. Like I said, if you're going to sell notes off, a lot of times servicers are not going to release those loans for sale until your bills are paid up on the specific loans. So keep that in mind. We ran into that as well. We bought a portfolio of notes and servicing transfer is going beyond 30 days. What's going on? Found out that the seller hadn't paid their servicing bills, and that led to an ugly email on those to get those loans released. So keep in mind, servicing can take 30 to 45 days before workouts start. That's one thing that we like to expedite too, is if we're buying non-performing notes, we don't wait for the 30 to 45 day hello and goodbye letters. We'll go ahead and send out our own hello letter in 7 days. If it's a performing portfolio and it makes sense to keep it with the existing servicer so that you're getting payments on time, nothing is a hiccup, that's great. Anytime you have any change, new servicing, new payment history, you're going to experience some hiccups. So keep that in mind. Sometimes it's good. Like I said earlier, where the previous servicing company is horrible and borrowers will looking for somebody to talk to. We bought 70 notes, and out of the 70 notes, we got 49 of the borrowers to communicate with us in the first 7 days, and they were just looking for somebody to talk to, and that helped us skyrocket. A servicing company can be your best friend. It can also be one thing that drags your portfolio out if you can't get answers and can't get resolutions on things. So don't be afraid to fire your servicer if they do a shitty job and move it somewhere else. There's a bunch out there. If you want my personal opinion, feel free to reach out to me. I'll gladly recommend 1, 2, or 3 for you, depending on what you're buying, and help you get the ball rocking and rolling. And this episode is not sponsored by anybody. Okay. It's sponsored by me. This is my opinion. Some of the things we've had good success with, others have had bad success with. So just keep it in mind. Not all servicers are created equal. Most of them do a pretty good job. There's going to be hiccups along the way. It just is what it is in this line of work, especially as a small note investor. You can't hire sometimes a full staff or part-time staff to help manage it. Yes, you can hire virtual assistants to help some of the stuff, but you usually do need to hire somebody personally if you're going to be beyond that 50 note, 100 notes. It's going to make more sense for you to hire somebody, pay them a decent hourly wage versus getting cut, bleeding to death by a million different paper cuts. So go out there, take some action. Feel free to reach out to me at talkwithscottcarson.com to book a phone call, and we'll see you at the top, everybody. Bye.
Hey, real estate investors, this is Scott Carson. I'm known across the country as the note guy, and I've been an active note investor focused primarily on the niche of non-performing notes, distressed mortgage notes, and residential commercial properties for almost 20 years now. My company is WeCloseNotes.com. And I know there's a lot of different things when it comes to the note world. Are you buying performing notes? Are you buying owner finance notes? Are you buying institutional debt like I would focus on? Are you buying first, seconds, contract for deeds? There's a lot of questions. And it can be very confusing about what you can or cannot do. So one of the great things that we've hosted for the last couple of years that we do on just about a regular monthly basis is we host our one-day class called Note Weekend. If you go to noteweekend.com, you can register for a free 3.5-hour class. We'll talk to you and share with you how you find, fund, and flip non-performing notes. And yes, you can buy non-performing notes from banks, hedge funds, and a variety of different hard money lenders out there for your own portfolio. No, you don't have to have millions of dollars to dive into the non-performing note game. We've got students that have bought plenty of deals with 25, 30 grand, getting their ball rolling, using their self-directed IRA, who are tired of dealing with toilets, tenants, trash chests, tired of battling contractors and GCs to get properties rehabbed. We all know the market is changing. And while it may not be like 2008, 9, and 10 again, we do see a lot of distressed debt out there on both the residential and the commercial side. So if you're thinking about diving into the note game, becoming a note investor, a lien lord, as you like to say, versus a landlord, or you just want to figure out what it is about the sexy side of real estate in the note space, well, check it out, noteweekend.com. Doesn't cost you anything. We host it live, usually the first or second Saturday of each month. You can go today, register at the website, noteweekend.com, register for the next live class we host. You'll get sent a replay of the previous class so you can start learning about the note business today. No questions asked, no credit card needed. This is a great way for you to dip your toes in the water and see if it's warm, because I guarantee going through our one-day class, you want to dive into the deep end and become a note investor. So check it out, noteweekend.com. You can also go to our website, WeCloseNotes.com. Check out our podcast. Check out our #1 YouTube channel. We are here to help support you. Whether you're an experienced investor or you're brand new to investing, Note Weekend is a great place for you to get the ball rolling. People often say we cover more in our 3-hour class than most people cover in their 3-day class. So check it out. Love to have you be part of our Note family, but get signed up today at noteweekend.com. Thanks and have a great day.